You go to the mail and find a heavy brown envelope from the tax administration. It's a request for information regarding your copyright income. A letter like this is designed to provoke a reaction. When taxpayers panic, they rush to explain themselves and often write sloppy answers that accidentally reclassify their own income. We are going to strip the emotion out of this process. Instead of panicking, you can use a methodical response framework that protects your intellectual property income and keeps you safely within the legal boundaries. Surviving an audit requires controlling the narrative. You aren't hiding information, you are simply forcing the tax administration to meet their own legal burden. Step 1 is reading the request for information objectively. Ignore the implied accusations and isolate the specific legal questions the auditor is actually asking. The copyright tax regime operates under standard legal principles. As this documentation shows, your initial tax return automatically enjoys a presumption of exactitude. Therefore, the burden of proof rests entirely on the administration. They must prove your declaration is wrong. To legally reclassify your copyright revenue, the auditor has to demonstrate 3 specific things: that no property rights were conceded, that the income lacks a link to an actual creation, or that the payment purely compensates professional labor. Your posture here should never be defensive. You are standing behind a high evidentiary wall, waiting to see if the auditor can actually scale it. When you sit down to draft your response, you will notice the questions are loaded. They are phrased to make your royalties sound exactly like your daily wages. Your written answers must constantly enforce a strict conceptual wall between your daily labor and your intellectual property. When discussing your professional income, state clearly that it exclusively compensates your daily services, the tasks you perform, and the time you spend executing them. When the topic turns to your copyright income, use completely different terminology. State that this revenue exclusively compensates the legal concession of property rights to an original creation. Maintain this precise distinction in every sentence you write. This prevents the auditor from finding ambiguous language to legally blend the 2 income categories. The most dangerous section of the RFI usually involves expenses. The auditor will ask you to prorate your hardware and software costs against your copyright income. Do not invent a mathematical ratio on the spot. Arbitrary fractions give the auditor unstable data they can dismantle. In reality, you use the exact same tools for standard services and IP creation, making separate tax accounting practically impossible. Instead of numbers, offer a qualitative response. Assert that your professional expenses are fully allocated to your core business operations, and that the creation of copyrighted material is an indivisible byproduct of using those tools. By refusing to play the administration's math game, you protect your professional deductions and starve the auditor of the arbitrary fractions they need to build a reassessment. The final step is compiling the actual evidence. Your goal is to provide exactly what is legally required, without volunteering a single page of unrequested information. Attach a valid copyright transfer agreement, your creative timesheets, documentation proving the work's originality, and evidence the work is actually exploited in the market. You must not attach client email threats. You must not attach raw financial ledgers. If a document does not directly establish one of those 4 core elements, leave it out. A lean, highly targeted evidence packet answers their questions completely while leaving no extraneous threads for the auditor to pull. You compile the documents, review the carefully segregated language, and send the response off via registered mail. You have successfully defended the conceptual wall between your income streams, bypassed the prorating trap, and firmly placed the burden of proof back on the administration. Tax compliance isn't an exercise in submission. It requires mastering the system's rules to confidently protect the fruits of your intellectual labor. The information provided here is for educational purposes. Every tax situation is unique, so consult a qualified professional before responding to any official inquiries.